Hey YouTube, this is Zach with Achilles Financial, and today I'm going to be talking about Cathie Wood, Ark Invest, and why she is selling a ton of Tesla shares over the course of this past week. The account that I'm going to showcase right here is Ark Invest Activity, which is, as you can see, not affiliated with Ark. It's kind of a fan account. But if you go onto the Ark website, you can actually sign up for a newsletter that showcases all of their trading activity. But I'm just going to use this on Twitter because it's readily, easily available, and this account is actually really good about sending out this information on a daily basis as soon as that email comes out. And if you want to follow me on Twitter, you can do so at Finance Achilles or Achilles Financial. If you type that in, you can see that there in the bottom left-hand corner of your screen. So as you can see, there was actually a lot of activity yesterday. And what was going on here is you can see that Tesla shares were actually sold across all of the accounts. So you can see in the ARKQ, which is the autonomous fund, in ARKK, which is kind of the innovation, and then you can see all the way in ARKW as well. So across the three funds, what we're really looking at is right at $350 million worth of Tesla shares were sold. And the reason that this occurs is, generally speaking, they will not keep Tesla at above 10% weighting in that lead portfolio. So as a lot of these other positions were declining, and Tesla actually didn't have a bad day, especially since they're up about $150 or really $100 over the course of the past 3 weeks, that is actually an investment that has performed incredibly well over the past 3 weeks. So as these other positions are declining, and we saw 100% of the stocks that are in the ARKK investment at some point in time yesterday were down. Again, 100% were down yesterday. You had Tesla was only down in some cases 0.5% to 1.5% yesterday. Because they continued to stay up, they were rebalancing the portfolio and selling those shares. So what does that rebalance look like in terms of the broader portfolio? Well, let's take a look. So this is ARKK. This is the largest of Cathie Wood's funds. And you can see here at the top of the position, there's still nearly $2 billion worth of Tesla sitting up there. And again, that weighting is still just north of 10%. So I wouldn't be surprised if we saw some additional share sales today. What you're going to see happen is that you're going to continue to add to some of these other positions, and you're going to continue to see growth in those positions, especially as they're taking some profits here at the top. I anticipate that should Tesla decline or should some of the other positions grow, that they would buy back into those positions. Historically, this calendar year, Cathie has done pretty well in terms of buying and selling Tesla shares. The reason why this is such an uproar, and the reason why this is not viewed in a favorable light right now, is largely due to the fact that over the past few weeks, Cathie has been involved in a number of interviews talking about, once again, Ark's price target for Tesla of nearly $3,000. So if you actually just go to Google, you can see that we actually have a price target on Tesla of $3,000. And I want to highlight 6 days ago, 4 weeks ago, 5 days ago, 5 days ago. So there was an interview last week where she reiterated the fact that if it were to go to their price target of $3,000 next year, which, keep in mind, that would be a $3.5 trillion company, which is larger than Apple, Amazon, Google, Microsoft, some of those other big shots. So in fact, it's not just larger than them, but it's nearly twice as large as some of them. The important thing to note is 5 days ago when she had this interview, or potentially 6 days ago, when she had this interview, they have sold every day the market has been open since they had this interview. They've been selling those Tesla shares. So it's not viewed in a favorable light. It is part of a rebalancing, but it definitely doesn't look good when you come out and say, hey, we think that this is going to be a $3,000 stock. It's worth $720. It's worth $750. It's worth $790. And you are selling the entire way up. So that's why there's a lot of the criticism out there. At the end of the day, it does look like it is more of a rebalancing act, but that's why you're going to see all of this criticism. So all that being said, you can track a lot of their trading on a daily basis by signing up for that newsletter, which is on their website. and you can also analyze the portfolio as that information comes out. So if you find this content helpful, please let me know by leaving a like and a subscribe. And if you have any questions, let me know in the comment section down below or in the Discord, which is linked in the description. So thanks for watching. Hope you guys had a good time, and I will talk to you later. Thanks.